Hey everybody, and welcome back to Real Estate Investing Q&A with Antoine Martel. I'm your host, Antoine Martel. So these are all questions that you guys DM me mostly over Instagram because that's where I have the most amount of DMs that I'm trying to get through. So if you want your question answered on a future episode, feel free to go to my Instagram, Martel Antoine. Go DM me your question, and I'll hopefully get around to it. I think today we have 6 questions that I have lined up. I got them all here on my phone, ready to go, so let's get started. The first question is from Kevin. I have no experience in real estate. How can I get started? Nobody has real estate investing experience until they do get started, and the hardest part is getting started. And one of the things that stops a lot of people from getting started is just not having the amount of capital they need, or not having a W-2 income or anything like that. So what I would recommend is just go and learn as much as you possibly can about real estate investing, how to get started in real estate investing, the different types of real estate investing, flipping houses, wholesaling, rental properties, commercial. Go learn about all those different things and learn the different ways to do those things. And then kind of match up your resources with the best strategy that makes sense for you today. And it doesn't need to be a strategy that you're going to do forever, but just something that you can start that you can start today. And you may not do wholesaling for 20, 30 years, but wholesaling could then lead you to quit your job, which now you could focus on doing multifamily properties, which then leads you into doing mobile home parks, etc. So choose a strategy that works best for you today, get started, and then hopefully that'll take you into something that you want to do long term in real estate. All right, this comes from the investment Don. How are you doing? Really want to learn how to get in buying cash flowing apartments, but do you raise money or go off of capital as in down payment and the bank fund the rest? So for me, the apartment buildings that I bought thus far, which has been 2 buildings, a 20 unit and 11 unit, I guess a 4 unit too, has all been funded with my own money. What I did is I just focused a lot on flipping houses, used the cash from flipping houses to then buy long-term assets that I want to hold. I will be getting into like some sort of raising money or syndicating or something like that in the future. But for right now, all I'm doing is just using my own cash to fund those apartment buildings. And then, of course, having the bank fund the rest. So I'm putting 25, 30% down, and then the bank is funding the rest at a super low 5% interest rate. So this question comes from Wicked Dope. Do you have a real estate license or brokerage license? Okay, I love this because a lot of people make excuses about real estate investing that they need to go get their real estate license. Never have I ever used my real estate license after 150 transactions. So I'm in California, which means I can get my California real estate license here, but I do business all across the country in a bunch of different states, so there's no point in me having a license in California. Literally doesn't help me at all. So if you're going to invest in your own state, yeah, do it because you can place your own offers, etc. But if you're investing out of state, which the majority of my listeners are, I wouldn't recommend spending any time on it. Just focus on learning what other people are doing in the real estate industry in your zip code or city. So if you're in like Wichita, Kansas, go to a bunch of real estate investing meetups there and see what everybody else is doing. And many people will have tried to wholesale there, rehab there, and maybe it doesn't work because the market's too expensive, so they need to go out of state. Okay, great. You know that you should just go directly and start doing out of state. And that's what led me to investing out of state is going to a bunch of networking events and seeing what other people were doing. Nobody was flipping locally. Everybody was investing out of state. So I saw that as a sign and, follow the crowd. There's a reason why everybody was going out of state. All right. Here is a question. I'm a 26-year-old and I live in Miami and I managed to save $35K. I want to buy a triplex and live in one of the units. Would you recommend this or invest out of state? And then he rephrased his question. In your opinion, is it better to house hack a triplex in South Florida or buy single-family homes in the Midwest that cash flow? Yeah, so great question. So house hacking is one that I get a lot, and I think that house hacking is a great way to get started. But there's a couple of reasons why I wouldn't recommend it if you have 35 grand. Because if you have 35 grand, it means you can already invest out of state and you can buy turnkey rentals out of state, start growing your portfolio out of state. You're pretty close to buying 2 rental properties with 35 grand. You can even buy like a triplex, a duplex in Cleveland or Memphis with that amount of money. So I would recommend looking at a state first. If you can't find anything that really works within your budget that you don't like, and maybe you need a place to live in South Florida, then I would recommend doing the house hacking. The only thing is that I've heard a lot of bad experiences about people who get started in real estate with house hacking. My parents, for example. They had a duplex. They rented out one of the other units, and managing that tenant was just a pain in the ass. It made real estate investing not fun. They had to deal with all the bullshit from the tenant. They had a bad tenant who was living right next to them, and they were the owner, and the other tenant knew that they were the owner. So all the issues kind of came up to my parents, and they had to, literally in the middle of the night, handle all the shit that was happening at that property. So it gave them a bad taste in the mouth about real estate investing, and real estate investing shouldn't be that way. You shouldn't be living on site on one of your properties and managing your tenants hand in hand like that. Out of state investing, you put your property management company in place. Now you have a scalable model. So I would recommend, if you could, and with that amount of money you can, to invest out of state, I definitely would do it. And I would just continue living and renting in South Florida. So live where you want to live, invest where you need to. That makes sense. And so I would keep renting in South Florida, rent an apartment, make it super cheap, and then just buy rental properties out of state with your 35 grand. All right. Next one. This comes from Hunter Rambos. You may have answered this somewhere before, but in your experience, would you recommend someone do flips to buy their first apartment building on their own or jump straight into syndication? I would definitely recommend somebody do a deal with their own money before they start syndicating. I think that's a big issue right now with a lot of people who are taking these real estate investing multifamily courses. They've never done real estate investing before, and now they're a syndicator. And it doesn't make any sense to me because you have no real estate investing experience and you're going to go raise $1 million for your apartment building. I don't know how people and why people are investing in your syndication. It blows my mind. And people are having success being syndicators like that too. Yeah. So I would definitely do your own, flip some houses, get your cash up, then buy your own buildings, then use that as a case study, then go and raise money for future syndications if you want to do that. But if you figured out flipping houses, you may want to keep doing that until the market crashes. Hello, have been following you for a while now. This is from Garrett. Just a few questions if you have time. I was wondering, do you have a college degree? How'd you get started in real estate? Do you do most of the fixing and rehabbing yourself, or do you hire out contractors? First of all, I would go and listen to the first episode of my podcast. I literally just talk about my whole story, how I got started. Then there's an episode with my dad, which dives in a little bit deeper. I would go listen to those two episodes. I have a college degree from Loyola Marymount University here in Los Angeles. My degree was in entrepreneurship. How'd you get first started? Me, my dad, and my brother went to a real estate investing seminar. We learned about flipping houses here in California. We tried that for a year. Didn't work out. Started networking our asses off. Figured out of state was the way to go. Started buying properties out of state. Doing the Burr method. Grew our own portfolio. Started selling properties in our portfolio to friends and family. And then that's how the turnkey business started. Now we do over 100 homes a year. That's a Cliff Notes for my story. Do you do most of the fixing and rehabbing? Hell no. Hire contractors, multiple different teams in every single market that we invest in. And we have project managers who manage all those contractors and all those GCs in those markets. So that's how I would definitely set it up. You don't want to be picking up a hammer or managing your contractors even. I don't even have the phone numbers of my contractors in here. And there's a reason why I set it up that way. But great question. I would definitely recommend having a GC and having a project manager on top of your GC if you want to build a scalable flipping business. So that's it for today. Thanks so much for asking your questions. Again, please feel free to go and DM me. I love it. I love doing these shows. So I love answering your guys' question on video. So if you guys want to go to my Instagram, Martel Antoine, go keep asking me questions and I'll keep answering them. Thanks again for asking all the questions for those guys who did, and see you next week.